Fook Hien is with Standard Chartered Bank. He's joining in to take some questions on the global setup. Fook, good to have you with us here. Thank you very much. There's a complete turn in sentiment in the US as well. What do you make of it? The S&P is, as I said earlier, about 2% away from a new high. Rally on?
Yeah, that's right. I mean, we just published our 2024 Global Market Outlook, which we titled Sailing with the Wind. So we do see the momentum in the global equities continuing, led by the US and Japan. And our view as well, our highest conviction view as well, is on the high-quality government bonds, where we've been seeing yields coming down. And as that comes down, it'll benefit your high-quality government bonds as well, because you get a capital appreciation on top of yield that is attractive at the moment. But in terms of risk assets, I think, yeah, our view is that the US continues to be strong. As the Fed, as you mentioned, they're talking about the yields coming down and rate cuts coming in next year. That's very supportive for the US equities, since a lot of them are growth-driven. So as rates come down, that's very positive for the valuation of these US equities.
All right. Hi, Fook. Good morning. Good to see you in. Fook, since you're expecting, the equity markets to continue to rally in 2024, give us a couple of details. First up, how much of, what kind of Fed action are you factoring in? That's in terms of rate cuts. And from when does that start? Point number one. And point number two, you're bullish on global equities. What about the Indian markets? Where does it feature in the list?
Yeah, sure. So we are expecting that the economy in the US will slow down only markedly from the second half of next year. And as inflation comes off, then that's when you can see the Fed having the ability to cut rates. So in total, we're seeing about 125 basis points cut by the end of next year. But a lot of that focus in the second half as the weakness comes in because the economy is going to be slowing down. So, 5 rate cuts, if you like, by the end of 2024. And just because you see the inflation coming down, the Fed being able to respond there. So we like global equities. As I said, the setup is preferred in the US and in Japan. Within Asia ex-Japan, we're taking a neutral view. And India is neutral as well within that. But given that we like global equities, I mean, overall, we do like equities going up. But within Asia ex-Japan, actually, our preference is for Korea, where we see a turn in the semiconductor cycle. That's going to be very beneficial in terms of the earnings growth and the earnings rebound in South Korea. So India, within that, we are neutral. Within Asia Japan, we'll go up together global equities. But the growth is good, but then you've got your valuation to contend with as well.
Okay. Fook, if you could just elaborate, why exactly do you have a neutral on India, and what is probably going to change your stance?
Yeah, I mean, we've had neutral in India for some time. This is on a 12-month outlook. We look at the growth as being very strong. And as you know, the structural growth story is very strong. And the earnings growth historically has been very strong, mid-teens as well. And compared to the other markets in Asia, it is very strong. But it's always just the valuation, which is very, very elevated compared to other regions. You've got China, which is at the doldrums in terms of valuation. Investor sentiment is very, very poor there. We think that a little bit of a surprise or anything just being stabilized could be positive for the market to rebound there. And then in the other markets, like I said, in Taiwan as well as benefiting from the turn in the technology cycle. But then in South Korea is our preferred pick in terms of the turn in the semiconductor cycle. We think that'll be beneficial for them. So India, don't get me wrong, we like the medium-term growth story, especially is very, very good. We do tell clients in the core holding. But as we look at the 12-month view as a rebound, what we see as the best opportunity at the moment within Asia, Japan, our view is with Korea.
Okay, all right, Fook, we're going to let it go on that note. Thanks very much for joining in, as always, and giving us your view on the Indian markets as well as the global setup. We need